and welcome to another episode of Entrepreneurship Uncovered, 3 things you need to know about income taxes. I'm Gabrielle Luoma, CPA, CGMA, and CEO of Mod Ventures. I will be facilitating and joining in this discussion with Larisa Cooper, CPA, my very own tax partner at Mod Ventures. Before we get started, let me tell you a little bit about Mod Ventures. Mod Ventures is an outsourced accounting and advisory company for businesses across the United States. Our accounting team is fully virtual and has been since 2014. Our passion is to help entrepreneurs organize, create, and predict their financial futures. We believe that strong small businesses create financially stable communities, and we want to be a part of that. Here's a little bit of information about Larisa. Larisa joined Mod Ventures in 2011 and became partner in 2016. She has an MSA, so that's a Master's of Accounting from Liberty University, 12 years of tax, accounting, and CFO experience. She's a mom of 2 boys and 3 Labradors and has a wonderful husband, Jem, and lives on a hobby farm. Welcome to our production, Larisa. This is the first time that you've been able to participate and be a part of this, so welcome. I'm so glad to have you today.
Thanks for having me. I'm excited.
Yeah, great. Well, we're going to go with the basics today, really. Broad stroke, what you need to know about income taxes. And for the world, there's all kinds of different types of taxes. There are sales taxes, there are franchise taxes, there are, did I say sales taxes already? No.
Yes.
Yes. Okay. So sales taxes, property taxes, and then we have income tax as well. So we're really going to just focus on income tax, but some of these principles do apply to the other areas of taxation as well.
Absolutely. Yes.
Essentially compliance, right? We need to comply with state and local, federal tax laws so that we are, staying in compliance. So that's what we're going to really talk about, though, today is income taxes. And so, Larisa, why don't you tell us why it's so important for us to know these 3 things? So, we stay out of trouble. We don't end up in jail or make our CPAs go crazy trying to fix things.
Right. Well, yes. So taxes, I mean, we often don't even think about them until April 15th comes around. But they're such a huge part of our lives. You can't go to the store without paying tax. And I constantly see memes on social media that talk about taxes, like, oh, you bought a house, you pay taxes and, like real estate taxes, and then you pay real estate taxes with income that you've been taxed on. Yeah. And it just kind of like the circle goes on and you get taxed on the income that you were taxed, and you pay taxes with the taxed income. And so taxes all around us, kind of. Sure. And the thing about it is, people often avoid talking about it until April 15th, just because it's also like a pain point, and people are also afraid of it. They're afraid of the IRS.
Yeah.
There's a lot of
fear. Fear's a big one.
Yes, a lot of fear about it. And I think it's very important for us, just because it's such a big part of our lives, and it affects our finances, it affects our retirement, it really affects our quality of living, that we really need to educate ourselves as much as possible and kind of turn that fear into knowledge, and knowing what we can do about it.
Right. So we want to empower you today.
Yes.
To understand some of these basics so that we can take some of that fear factor out of your mind and your life, and obviously make it so much more beautiful.
Yes.
Imagine that's what we're doing. We're making people
more peaceful,
more beautiful and peaceful. Yeah. So, so you talked a little bit about how we're tax avoidant in our lives. And it really helps us to dive into this first point, which is tax evasion being bad You don't
Mm-hmm.
really pay taxes, but tax avoidance is good.
Yes.
Tell us a little bit about that concept.
So I don't know where I even heard this saying, but I really like it. And basically, when people hear tax avoidance, they think tax evasion, and that fear kicks in. And oh, we can't avoid taxes because the IRS is going to come knocking on my door and they're going to take me to jail. And it's yes, tax evasion is bad. You don't want to do something illegal. You don't want to hide your income, but tax avoidance is actually good and it's encouraged by the IRS. And all it really means is that you're taking advantage of the deductions and the credits that are available to you. And a part of it is educating yourself again about what those savings are and what is available to whether a business or an individual. And what I see is some of those items are really basic, and a lot of people are missing out on those. So for instance, with businesses, some of the most common ones that I see commonly missed are a mileage deduction. We get to, March and April, and I say, hey, did you keep a mileage log? And oh, I didn't know I should. And there are apps out there that make it so easy and almost mindless to just have it run in the background. And sometimes people will say, well, I don't drive much. How much can it be? It's not really going to add up to a lot. But the mileage deduction is quite generous.
Yeah.
And it adds up and it saves a couple $1,000s on average from what I've seen. So do it, have that mile tracker in the background, use an app. And the other one is we work with a lot of businesses, and especially, in this post-pandemic era that we're in, or even during the pandemic, people didn't work from an office anymore. They worked from home.
Yeah.
So the amount of home office usage has increased. So that's another one that a lot of people are missing out on, is not taking the home office deduction, not taking the home office depreciation. And that's huge, because here's the thing: if you have a home office and you go to sell your home later and you say, well, I never claimed the depreciation, so I'm good. The IRS doesn't see it that way. They're going to consider that as if you took that depreciation. So you might as well claim it.
Yeah.
And then, making sure you're the right entity type. A lot of businesses are not. I'll see a sole proprietorship file taxes and, they have 70, 80,000 in profit and they file as a sole proprietorship, and they're not realizing that, maybe it's better for them to be an S corporation, and they might save, I don't know, $10,000 in taxes, maybe.
Right.
Again, it all adds up. So
Yeah.
again, tax avoidance is good. Educating yourself on that, asking lots of questions, reading articles, asking your tax preparer, what am I missing? What else is available for me? And the same with individuals, I'm a tax preparer, and I forget about that sometimes too. We installed a new heat pump and I didn't even think about it. My husband says, hey, don't we get a tax credit? And oh yes, that's right. And that's something that I should think about automatically, but you don't. And some states, like we're in Arizona, they even offer credits for fees paid to public school. And, most of us have kids and most of us pay fees to public schools. So there's deductions not just on federal level, but also on state level. Again, like anything that we do probably has a consequence on taxes.
Right.
And one of the most common questions I got over the last few years is from people who do pay taxes is, well, how come Donald Trump doesn't pay any? What am I missing? What are you not telling me? There's got to be some loophole, some special tax deduction for the rich people that they don't get to pay any tax. And here I am, paying thousands of dollars in taxes. And the thing about it is he's really good with tax avoidance.
Yeah.
Taking deductions, investing in equipment that will allow you to deduct it all right away. That's another common question that I run into. Somebody will buy a building and pay $1 million for it and they don't get it deducted.
Yeah.
So they just spent $1 million and they don't get a deduction. But I mean, you will over 40 years.
Right.
But you spend $1 million in equipment and you get deducted right away. So it's all about planning and knowing how to spend the money.
Exactly. Well, I love that because he also, Donald Trump, uses some of the um like capital gains tax and stuff like that.
Yes.
He changes the, oh gosh, what is the word for it? The nature of the income that he's receiving.
Mm-hmm.
And so,
Yep.
you know, depending on what type of income you're receiving, also can affect, how you're
Yes.
taxed. And so there's a lot packed into real estate and how people can really use real estate as a huge advantage with, let's say, this tax avoidance, because there's a ton of write-offs that come with it. And every time I say write-off, I think of there's a TikTok that always talks about, that's a write-off, that's a write-off, that's a write-off. But the fact of the matter is there are tons of tax deductions that are legal, and
Mhm.
most people are not taking advantage of all of the ones that they could be.
Absolutely.
Having a conversation with their professional is super, super helpful when you start doing some tax planning, and looking at how to um, really, I say invest back into yourself. That's what I want Mod to really focus on when we're talking to our clients. It's about investment and where you're going to
Mhm.
put your money so that you can invest in yourself and not just give away thousands of dollars to
Right.
the IRS. So I love that we're talking about all the different ways to do that.
Yes. Yes.
So I think one of the other important items that you've mentioned, or will be mentioning here, is the timing is super important.
Mhm.
We all know about April 15th, but there are other due dates and timelines that we need to pay attention to. Tell us a little bit about that.
Yeah, so you just I mean just a few seconds ago you said about not giving the IRS more than you need to, and it comes to that also when you think about the timing of the tax payments. A lot of people get excited that they get a refund. Well, that's great, but all that really means is the IRS held on to their money for a year with no interest. They
Mhm.
could have invested that money, they could have put it into stocks, even a savings account,
Mhm.
instead of not having those monies. So, tax planning is very important, and making sure you pay just enough, not more and not less, because you also don't want to underpay and then have to owe penalties and interest. So it's very important to pay the estimated tax payments on time, um, paying the balance due before the tax return is filed, because those penalties and interest, they add up. And again, it's the money you could have invested. And some investments, they pay more than what the IRS charges to. So kind of weighing your options. We do have some people that say, hey, I would rather pay the IRS, the penalties and interest, because I can't find a good investment option. And that's something to consider as well. Talking with a financial advisor, figuring out how much of a return you can get by either owing the money to the IRS, or use it. Definitely don't overpay. That's the biggest thing,
Bottom line,
because
yeah.
bottom line is you're just going to lose a lot by having the IRS hold on to your money for a whole year. But what helps with that is making sure your documents are ready and organized for the tax preparer, because then they can get the tax return in and prepared fast, and they don't have to go through a shoebox of receipts or ask a lot of questions. Send it all in at once so that it's not just piecemeal here and there. And I think it also helps, if you want to receive the best service and be able to have your tax preparer think about your situation as a whole, it helps to have it all at once. Because when you're going back and forth, it kind of, you take your focus off of it. And you need to be like, you want that your tax preparer to be focused in your return, get in, prepare it, and see what else you should be doing different.
Right.
And if the time and energy is wasted on silly questions, then it doesn't benefit anyone. Um, and one thing I also run into a lot is with extensions. People are afraid to file an extension. Again, there's that fear. I would rather squeeze in and get my tax return by, on April 14th at 11:59 at night than file an extension because the IRS is going to come after me. And it's actually increasing your audit risk if you file an extension close to the deadline, because the IRS counts on your tax preparer being tired, you not providing all the information, and something getting missed.
Yeah.
So an extension does not increase audit risk. It shows that you did your due diligence, you took the time to gather everything, make sure everything is correct. And, in the end, they care about your tax return being done right,
Right.
not that it's received on April 14th.
Yeah. So accuracy over fast. Um,
Yes.
and that is truly a tension that we deal with over, I mean, years, right? 20 years of,
Yes.
or more preparing tax returns, at least on my end. I can tell you that accuracy is a lot more valuable than fast. And so, considering that, one of the things that we didn't mention in the previous point was, and you mentioned mileage as being a super important thing. There is an app that you can use called Mile IQ that
Mm-hmm.
can be collecting all this information so that when you do get to year end, you have all of your mileage documented and
Yes.
ready to go. So, and I would say that's probably one of the last things that we tend to get from people, and it's usually piecemealed, right?
Yeah.
It's after you've reminded them, like, hey, I need this mileage log. And
Yeah.
they're having to go back through their calendars. Well, the thing about the IRS, and this is, from going through a couple of audits, information that is gathered at the time is a lot more reliable and something that the IRS will think kindly on if you are going through an audit. So you're not going back and recreating, what happened 2 or 3 years ago, because that happens a lot.
Yeah.
You
And the
know,
IRS may not even accept that because it was recreated.
right. So having those documents at the time that it
Mm-hmm.
happened um, is super important for your audit backup or documentation for your actual tax return. So, keep that in mind. My IQ will save you so much time and energy. And I think it's like $6 a month or something like that. So it's
Yes. And it's not a whole lot. And, that fee is deductible. It's
Mhm.
tax deductible. So it's definitely worth it. And it gives a nice report at the end of the year. And there might be other apps. I'm not familiar with them, but MileIQ has been our go-to
For you.
that we,
Yeah.
yes, that we recommend. And gosh, it's the report that it provides is really beautiful.
Yeah.
And I mean, it will give you like 100 pages, but we only need the summary page. But we have the 100 pages if the IRS wants to see them, and that's what makes a huge difference. And like you said, going back through the calendar, there's no way you're going to get that kind of level of detail.
Yeah, exactly. So document, and do it at
Yes.
the time. So important.
Yes. Yep.
Um, so our last point, and I think this is, kind of goes along with, just taking that responsibility, of making sure that you're prepared and you know what you're supposed to be doing for tax preparation, is really understanding that, you are the master of this ship. And
Mm-hmm.
nobody knows your tax situation better than you do. Um, so tell me your thoughts on that point, Larissa, and how you've seen this be really beneficial when we have like a partnership working on
Mm-hmm.
this tax return, as opposed to,
Yes.
you dragging information out. So
Yeah, yeah. Well, so the first thing is definitely communicate it with the tax preparer throughout the year. Um, We run into this so often that somebody will come to us and say, "Hey, surprise, I sold my business last year. So what are my taxes going to look like now?" And every time I go, I wish you told us before you sold it, because you could have had a couple of different options that would have saved you a lot of money. Or maybe it was the timing. Maybe you should have waited like an extra month and you'd have been eligible for a special, savings on the stock sale. Or there was a different way to structure the sale. And it's not just about the, a selling of the business, but kind of like I mentioned earlier, oh, we built a building or we bought one. And sometimes we have to go back and undo things that were done and do them differently. And it doesn't always work. I mean, yes, you can, if somebody bought a vehicle in a personal name, we can still transfer it to the business. It's not as pretty. But just having that collaboration and communication throughout the year. I mean, it doesn't take long. Just send an email. I'm thinking about buying a vehicle. How much of a deduction am I going to get? Because there's also different deductions based on the type of the vehicle you're going to get. So it could be a matter of, 10,000 versus 80,000. So super important to have that communication line open and working with a preparer that's going to be available for you throughout the year to work with you. And also, of course, if you're like me and install a heat pump and you forgot to mention it to your tax preparer, that happens. If your tax preparer does not have a questionnaire, ask for one. You can even probably find one online. But if they have that questionnaire, definitely fill it out, because anything that you answered yes to, the way at least on our end, the way our questionnaire is structured is, if they answered a yes to a question, I know I need to go back and ask more about it.
Yeah.
And that questionnaire is sometimes like 4 to 5 pages long, but it really goes over everything that we could be missing,
Yeah.
that we really should include on your tax return or think about in the future. And again, Gabby, as you mentioned, nobody knows your tax situation better than you. And that doesn't mean that everybody's supposed to be a tax professional and know the tax code. It's just, a tax preparer is not going to know what happened in your house. They're not going to know that you installed, solar panels or replaced your windows. And if you don't do the questionnaire, don't think to ask about it, then you could miss out.
Yeah.
So again, knowing your situation, thinking throughout the year, how is it going to affect my taxes? And obviously, I get it. You can't live your whole, your life thinking every day about how it's going to affect my taxes. But just, think that when you have big purchases, prepare for it. Don't think, oh gosh, April 15th is coming up, I'm just going to quickly scan all my documents and forget about it. Just face that fear and turn it into a savings opportunity.
Yeah. Well, I think you made a really good point about the tax organizers.
Yes.
If you're not working with somebody who provides tax organizers, I think that's a good indicator that they're not really doing a lot of tax. I don't know if it's tax planning or if it'd be more like tax avoidance, ideas.
Yeah.
Like they're not really looking deeper. I know we've had a tax organizer we've always had it. And that's one of the things that we really rely on, because it does ask those in-depth questions so that we know to ask more. Like, tell me
Yes.
more, what happened? Did you have a stock sale? Yes, I had a stock sale. Then you can start diving into, get the details, figure out what really happened, and then make sure that you're properly accounting for it, or reporting on it at least. But yeah, we need to know, we work with clients throughout the whole year. And so, we have situations even where clients are buying vehicles and we start to see note payments go through and we're like, wait, what is this for?
Right.
So it happens to all of us. And so
Yes.
we want to make sure that, you're keeping your tax situation in mind, but you're also your accounting and your reporting needs to line up throughout the year as well. So they kind of go hand in hand. with having good reporting and good tax preparation.
Absolutely.
Yeah. So let's go back and just do a real quick, you know, pass over about the three things that they really need to know about income taxes.
Yeah, so basically, I think it comes down to tax planning and everything that we talked about. And I would split it into three categories. First one is strategy. Uh, do your research, ask questions. The second one is timing. Make sure, it's not going to help you to have a strategy if you're not going to follow through. If you're not going to pay taxes online, if you won't be organized and say, oh, yes, we're going to do the retirement contribution and miss your deadline. So after you have your strategy, make sure you follow the timing, stick to the plan, adjust it as needed with the help of your tax preparer. And then the third point is collaboration. That piece is super important. So, anything changes, talk to your organizer, stay in touch with them throughout the year. And even if it's just a matter of, having that one meeting before the year closes to review your situation and say, okay, this is what happened. And this is, what I think is going to happen for the rest of the year, and knowing what to expect. Because, if you have that meeting in October, November, and something needs to change, it can.
Right.
If you have that meeting when it's time to file your tax return, it's too late at that point. There's
Yeah.
not a lot that can be done
Right.
after the year closed.
Right. You can't do tax planning for the previous year on April 15th. It just
Right.
doesn't work.
Yeah. Yeah.
Yeah, I mean, I have seen magic happen, but
Yes.
very few opportunities to do magic in
Yes.
April 5th, in April.
Yep. Yeah, it's
So
basically just limited to retirement and maybe some charitable contributions for states that allow it, and that's it. There are
it,
no other options.
right, right. Yeah, so I think that that's, so important for us to um, help these viewers to understand, like, what are the three things that you really need to focus on? It's strategy, it's timing, and it's collaboration. Three main points, really important stuff.
Mhm.
And a lot of times we'll see people who are, come in super gung ho and they are ready with the strategy, but you have to have the follow through
Yes.
and pay attention to timing. And so usually that really helps if you have a partner, like us, to help with
Mhm.
that collaboration and setting timelines and due dates and things like that with them. So we do a lot of that with our clients, and it really does help. Um, I mean, I always say we've saved people millions of dollars in taxes just by
Yes.
taking advantage of regular tax savings, planning, follow through
Mhm.
on strategy, things like that. And um, it's really not hard to do if
Yep.
you have a partner and you are intentional about it. Um, so any last thoughts on that, Larissa?
I think the main advice that I have is, fear not,
Yeah.
right? Don't be afraid of it. And it's kind of like I think the fear comes with um people not knowing as much about it as they should. So educate yourself and ask questions to the point where you're not afraid about it anymore.
Mhm.
And surround yourself with professionals
Mhm.
that will support you and help you. Like I said, you don't have to know the tax code. You
Right,
just have to remember to ask questions and have a professional who will ask you questions back.
right, exactly. Um, well, thank you so much for coming and sharing your knowledge with us, Larissa. We're gonna have you on more because there's more things that we can talk about. Man, we talk about
Absolutely.
a whole bunch of tax things,
Yeah.
6 different taxes that we could talk about, but income
Right.
tax is really important and it hits everybody. So I'm really glad that we can get together and talk about those things.
Me
Um,
too.
So for those subscribers who would like to, learn more about Mod Ventures, we're going to have all kinds of information down below. You can check us out. There's also our website, modventuresllc.com. And we have a bunch of YouTube videos that are coming out on our channel. So we hope that you will like and subscribe and be a part of this channel growth and this firm. All right. Well, you guys have a great, great day, and make sure that you're intentional with your planning. Talk to you soon. Bye.
Bye.